So my next guest says it's getting increasingly difficult to figure out where asset markets are likely headed just based on evolving fundamental outlook alone. I want to bring in now 42 Macro founder, CEO Darius. And it's really been hard, to be honest with you, for me for a long time. I mean, I use mostly fundamentals. I use technical. I try to understand behavioral analysis. So, we've got some of the things, some of your active themes, and I wanted to kind of go over them with you. First of all, where do you see the U.S. economy right now? I know maybe this is about a week ago, sideways. Is that arrow still tilting? Is it tilting a little bit lower now?
Absolutely. And Charles, thanks for having me. It's always a pleasure. You're looking good, my friend. So yeah, we have the economy slowing, but slowing from a very high level to a trend type level of growth over the next 12 months. That's obviously scary at the top of the markets after such a big rally.
Right.
But at the end of the day, we ultimately think growth is likely to surprise to the upside throughout over a medium-term time horizon.
So this is the normalization thing some folks have been talking about.
Exactly, economic normalization.
The pace of the recent news, though, does that worry you at all? Sort of like the Beige Book, for instance, you had, I think, 9 districts from 5, the unemployment rate. Some of these things, not in general, are they moving okay? Do you see some sort of stall speed or terminal velocity? Because some would feel like they're moving pretty quickly for a soft landing.
Yeah, true. And you can pick and choose which data points,
right.
But generally speaking, the preponderance of evidence points to an economy that is moderating. It points to the labor market that's moderating, but is not falling off a cliff. When you look at the leading indicators of the broader business cycle, they're not aligned in a way that suggests we should be expecting a downturn over medium-term time horizon. That's obviously a bet good for asset markets.
So with that in mind, you have an interesting take on what you think the Fed should do based on the fact that you don't see the economy really maybe, can I say reaccelerating next year?
Yeah, I wouldn't say economy, but we're concerned that inflation is nearing the sort of bottom of its cyclical path,
right,
and ultimately will start to meander higher again in the first half of 2025. And so it's our view that the Fed needs to front load as many rate cuts as it can in the second half of 2024 and the early part of 2025 to preserve the business cycle. If they don't get as many rate cuts as in by the end of March of next year, then they may be too late.
Right, and well, they've got a lot of room. They got global green shoots. Where do you see the global green shoots?
Well, they had been in places like Europe primarily, and then we saw some green shoots in Japan, and we saw some green shoots in a place like Australia and Canada. But over the past couple of months, we're starting to see the preponderance of leading indicators globally really start to crest and slow down. So this cyclical upturn in growth that we saw across the global economy early in the year that our clients benefited from, it looks like it's starting to take a pause and may be done.
Is there one particular linchpin that has influence over all of these things?
Well, the dollar is usually the most dominant factor
right,
in what happens with the global economy and with global liquidity. And right now we have a dollar that is poised to decline significantly over the next 12 months. And that should create a positive, lift to global growth, while at the same time could potentially cause an unwinding of some of the, yen and more popular carry trades across the global investor community. I'll throw a stat at you. The U.S.'s net international investment deficit doubled in the 5 years through 2023. It went from $10 trillion of claims that foreigners owned in U.S. assets
right,
to $20 trillion.
Right.
That's a lot of real unrealized capital gains that could flow out of the U.S. market if the Fed is not careful in terms of the speed of the dollar decline.
So with that in mind, some have warned that a 50 basis point cut could actually trigger that kind of action.
Well, yeah, a 50 basis point cut would absolutely trigger that kind of action because it ultimately would send a signal to international capital allocators that there is something wrong in the U.S. economy. So it's a really tightrope dance the Fed has to walk right here. I mean, we would suggest not starting with 50, but if you continue to get quantitative confirmation from the labor market and from inflation that you can accelerate the pace of easing,
right,
they absolutely should accelerate the pace of easing between now and, let's say, March 31st.
I got just 30 seconds, but what are you telling clients and people who know, you have this lofty perch in the market? I know a lot of people calling you. What are you telling them as they become more anxious right now?
Yeah, well, it's what we've been telling them since late June. I mean, we took down our equity risk from 100% of our maximum exposure to 50% of our maximum exposure. Oh, yeah, we did that in late June. So we obviously on the right side of this correction. And we continue to hammer the table on be long the defensive sectors and factors in the market. That's dividend compounders. That's mega cap growth. That's, large caps in general. You don't want to be long cyclicals here while the market is trying to figure out the pace of the grth slowdown. We ultimately think it won't be that slow, the slowdown,
right,
but ultimately the market needs to figure that out.
This is sort of a moment of truth that filling itself out, and this is part of the reasons for the volatility as well?
Totally. And don't forget, half the country's going to be, pissed off, for lack of a better word, in a few months. And so that could be creating a pause in business investment right now that may not ameliorate itself until the end of the year.
All right, great stuff.
Charles, it's great to be here.
Great to see you. By the way, congratulations.
Thanks. And shout out to Jackson.
Jackson's the new baby.
I appreciate you.